weekly housing briefing. It's Friday, July 18th, 2026, and we are going to dive into some major headlines and definitely share with you exactly what that constitutes as far as what's happening in the market and what that actually means for you and your local market. We're going to dive on in. Okay, so right now, as we see, the headlines feel a bit contradictory. Foreclosures seem up, as according to the headlines, sales are slowing, and everyone telling you the market's crashing. But sales aren't actually slowing, they're kind of rising, and sellers are cutting prices to sort of meet buyer demand where it's at. So the market isn't actually stalling. It's actually recalculating. So it's a different perspective and a different way of taking a look at it. Now, here's why rates are stuck in the mid sixes. Traces back to oil and the Iranian war. So with the supply disruption overseas, it's keeping energy costs and inflation elevated, which keeps the Fed on hold. Now, until these things move, well, like oil, and the markets move in a sustained long-term way, any dip in rates is merely a pause. It's not going to be a trend. Now, right now, the 30-year fixed is averaging about 6.68. That's mortgage nuggets. The 15-year fixed, 6.19. FHA and VA are averaging about 6.29. And the jumbo loan rates are averaging 6.874. Now, this is as reported from Mortgage Nuggets, who survey from over 200 lenders, an average of 7-day interest rates from around the nation. Now, here's the good news. Qualifying is getting easier. That's right. Even with elevated rates, we see the new scoring models that are now allowing for counting of rent and utilities and phone payments. And it's not just classic credit. More people qualify today than did a year ago. They are creating every single day new products, new options, new down payment assistance programs that help you and others qualify for mortgages. Now, I back every recommendation with the real estate market with data and agent level insight. So if you're deciding with much better information than most buyers ever really actually see as they enter the market. Now, whatever your obstacle, there's a solution. Down payment gap, grant, crowdfunding programs, tight inventory, renovation loans, building long-term wealth, specialized payoff products. There's even an option for investors to actually be able to sell their investment properties that have a tremendous amount of equity, not pay any taxes on it, and reinvest it into a larger project. Now, my clients describe the process as educational, communicative, and fast, some closing in under a month. I mean, typically we wind up closing within 2.5 or 3 weeks is the average loan. But these are real testimonials that we have. Now, beyond the numbers, CMG also has CMG Cares Foundation that they work with Gary Sinise on raising, and they've raised over $3 million since 2011 for veterans, family, and cancer support. Also, outside of that, we do bring in a lighthearted, fun beat on Real Estate Nation with Murder, Mayhem, and Mortgages. It's a podcast you can find on YouTube that brings in the lighthearted, fun, dark side of real estate. All right. And for our meme of the week, for Home Loans with Heart, basically it's the POV when you spent 5 years waiting on a housing crash, only to realize that same $400,000 home you've been stalking, guess what? In 2026 is now $700,000 and 3% rates aren't coming back. That's right. I'm Robin Hart with CMG Home Loans team in Mansfield, Texas. We're licensed in Mansfield, Texas, and Florida, and soon to be Louisiana. Let's start your home journey today. Bye. Hope you have a great day.